Hi, this is Nick Radge, manager of the Harbourside Direct Equities Satellite Strategy, and we're going to talk a little bit about April's market performance and the market in general. If you're new to the channel, the Direct Equity Satellite Strategy is specifically designed as a high growth and a genuinely active investment strategy that attempts to exploit momentum in the Australian market. We are a 100% quantitative systematic approach, and we focus on the All Ordinaries Index X the top 100. And a unique part of this mandate that we have is that we can revert to cash 100% if necessary, and that occurs during sustained bear markets and other volatile periods of time. Now, what that mandate allows us to do is two things. First of all, create a very strong risk-adjusted return over the longer term, and it also gives us a lower correlation to buy and hold type strategies and portfolios. The portfolio correlation is about 0.49. We'll take a look at that very, very shortly. So very interesting month in April. I've been doing this for 38 years, and there's always something pops out to surprise us, and that's certainly what we got in April. So our satellite strategy was actually down 1.18% during the month. We were in cash for the month. We did exit positions from March at the start of April, which is why we've got that negative performance there. The small ords finished up 1.8%, which was quite remarkable because one stage it was down 8.2%. And in the middle of April, it was down about 18% off its recent highs. So it has swung around very, very quickly. Full year, the satellite, we're lagging again now, down 9.2% versus the small ords accumulation up 0.8%. Not very fussed about that at all. This portfolio has the ability to catch up very, very quickly. And we've seen that before. From memory, 2020, the portfolio was pretty much flat in the month of coming up to May, June, and then it swung highly into the close of 2020 and had a great year. So the key highlights for the month of April, and dare I say it, this really doesn't give you a good indication of what occurred. So we did remain in cash during April. As I said, the small ords closed up 1.8 versus an intra-month decline of about 8.2%. Now, to give you an idea, in the US market, going back to 1930, there's been 69 months where the market has had an intra-month decline exceeding 10%. Now, April 2025 was the only time since 1930 where that intra-month decline was actually reversed in full. So to give you an idea of what actually happened, it was looking pretty dire halfway through the month. So pretty interesting in the US market as well. A lot of buyer demand coming in on that weakness. It just seems the market has just shrugged this tariffs off, even though economic data is starting to show some strong headwinds. It does remind me of 2008 actually, and back in 2008, we saw the markets drift lower into April, exactly what's occurred this year. And then they rallied into the end of May, and it looks like we're getting some strength here. And then back in 2008, they rolled over and went down again. So at this stage, our portfolio remains in a defensive mode. If we do continue to get strong buyer demand through the month, it might be that we do get back into the market come June, but for the month of May, we're going to be sitting out. So at this stage, it's all about tariffs. It'll be interesting to see what economic data will come through in the coming months. All that to us, however, is just noise. We will be following the trends. We do not attempt to buy weakness or dips or anything like that, but we look to participate in sustainable trends and get out of the market if we have a sustainable downtrend in place. So just having a quick look at the chart of the ASX small caps. This is a small ordinaries. You can see from that recent peak back in mid-February to mid-April, we dropped about 18%, and we've rallied back quite a bit. So that's reasonably bullish actually. And when we look at the volume side of it all as well, we saw a lot of buyers coming in on that weakness, which is quite amazing considering what's going on in the global economy. So as usual, if you have any questions, happy to answer them for you. My email address is nick@thechartist.com.au, and thanks for listening in.